Hello everyone, good to see you and good to see you finally seeing me. And today we're going to have a trade recap. I'm going to go for a trade I had on EU, a long on the 14th of March. And what I'm going to do is I'm going to go through the analysis, the pros and cons, and pretty much, my strategy as to how I executed and won this trade. So hope you enjoy it and feel free at any time to just subscribe. We're going to start off here on the 4 hour, and I'm just going to show you for the last couple of days, previous days, it had bullish days. On the daily, these were quite big bullish candles, as you can see, going from the Thursday to the Friday to the Tuesday the 14th, where I traded. Forgive me for this candle, obviously it's using a replay tool, so it might be showing more of the day. And so down to the 4 hour, so I had my daily bias, we were bullish, and I believe we were bullish up until a certain point still, so I was still happy to go long. And here you can see, 4 hour swept liquidity here, made a new high, right? So this is the new higher high. We're in a bullish trend clearly on the 4 hour as well, right? And so down to the 1 hour. Here is the 1 hour leg I had identified. We had swept liquidity to the left from previous lows. We swept this sell side liquidity, and we also came into these OB structures here, this order block structure here, and now we've created a new high, and we had swept liquidity to the left there. So we had swept buy side liquidity to the left, and after buy side liquidity is taken, usually it searches for sell side. So we're predicting there to be a pullback, right, back down into the discount of this leg. So as you can see here, I've got my 1 hour order block lined up. What I've done here with the fib 0 and 100 showing the 50% of the imbalance and fair value gap. So that's just because these are commonly places where price rejects, right? It's still a POI. Obviously I have the OB marked out, but that's for awareness of the imbalance or fair value gap, whatever you call it. So what you might notice here is what I want to point out. So though we've taken buy side liquidity, yes, there will be sell side liquidity, I guess, within the OBs and the imbalance, right? Because it needs to be filled. And more importantly, what I want to point out is you'll notice the difference in energy here. This sell side liquidity was taken and you got these big candles up. So it took about 5 candles to breach this high. Notice the difference in how many 1 hour candles there are on this retracement here. It's way more corrective, slower pullback. So in simple terms, it doesn't look like the bears are in control. It's building a buy side liquidity trend line as it's coming back. So you've got your buy side liquidity being built as you come back down now. So now I'm looking at this interested. I'm wondering, okay, I'm going to keep an eye on it until this 1 hour area, and we're going to see what structure could form here for us to go long. So if I go down to the 15 minute, where it's much clearer, I'll go through the day and previous day. So you see the previous day here, we had a big move up in Asia and then taking this buy side liquidity, and then it creates a range as it usually does, right? Created a nice range here where London came up, I think maybe just barely took it out by a pip, but let's call those equal highs, right? Because they're good buy side liquidity targets. So it's equal high or barely swept. Then we got this great move down through London, which swept the lows of Asia, come into this imbalance in the end of London and beginning of New York, took all that sell side liquidity, and what happens there? We go for buy side liquidity now. We go for these equal highs, London high, Asia high, and it was probably, I suppose it was just a session high. Previous day high would have been here. Not sure if it was the previous week high that it headed for. I think it may have been. So yeah, we've got this nice move up here. I didn't get any trades here, I think I said in my video, but it was a nice obvious move. So same thing, what we're looking for today is we've got this overnight price structure happening, and overnight it's just slowly dripping down, all of this creating this sort of buy side liquidity trend line above these highs. So this is stuff we like to see, this is stuff we like to target, and all that liquidity there being taken. So now I'm on the 15 minute. I like to enter preferably on the 15 or 5 minute. If there's something super clear on the 15 minute, I'll just take it from there, because why go down further if I can get the risk to reward and all of the pros are present on the 15M, and I don't need to go looking for an order block or fair value gap, and it's just there. So I'll take that. So for me, the reason why I traded this one differently, so if we look here, I'll remove this for a second. On the 15M, there was this fair value gap here and this order block here, which I could have used, right? I didn't really like how choppy it looked. Not choppy, but you know, I like my order blocks clean and clear. You know, something like this, just straight down order block. You know, we've got our fair value gap and go. This was a lot of, you know, spiky price action. And then while I was going back up to my higher time frames, I just thought, do you know what? I'm looking at the hourly and I'm like, if this was on the lower time frame, I would trade this. So why not? Why not give it a go? So this is what I did, right? I measured out my fair value gap imbalance here because I like to enter. I'm more concerned about getting in trades that look high probability to me than making the stop smaller. So I tend to enter off the middle of the imbalance, 50%. So that's only if I can get the risk to reward and everything and it looks safe. So I saw this fair value gap, this order block, and I saw this pulling back correctively, right? So I thought, cool, lower time frame, that's a trade for me. We've also got a breaker structure here, even though it was a sweep of the liquidity as well. We also have to keep in mind the reaction from there. Got this break of structure here where we closed above the previous highs, right? And because we didn't get any explosive fast pullback after this sweep, and it was creating buy side liquidity for another move up, you know, there's always going to be cons. The cons were obviously previous daily low sell side liquidity below here, and that could get swept before a move up, which I was fine with given how the trade was presenting itself. If it did, I'd wait for structure, go down to a low time frame, wait for a breaker structure to the upside, and see if I can get involved, right? If I took the loss. So yeah, fast forward, this is how I measured out my trade. I was around here, and my stop was just below the low somewhere. May have been 448. Either way, you get the picture, and I could get a 2-to-1 or plus to the highs. Yeah, so you can see there the risk to reward was there and the trade was looking good. So I had no arguments with having this entry, having this stop, because if it took this stop out, then, you know, I was happy to have the trade invalidated and move on. So we've got our breaker structure, our high probability order block with fair value gap. We've got the corrective pullback, right? We've had a sweep and we've had the buy side liquidity build up from that corrective pullback. So I'll play this forward and we'll see how it plays out. So at this point I was tagged in, and if I hadn't have used that, like I said, I tried to use the fair value gaps because they are a good point of reversal and liquidity as well. All right, so now I'm tagged in the trade. Trade's going very well. I would have taken partials and gone BE around this point, and trade's going well. I am keeping in mind, however, that because this hasn't touched the order block, we could still get a pullback, right? Because this could now be inducement for the long. If this had stopped here and come back down, the long would probably look even better. So you would now have inducement above the order block and it could come down and have it, but just keep that in mind. So I'm just going to let this play out. And at that point, it actually spiked me out. So I was take profit already, actually hit my profit target, and I was out of the trade. So that was a bit scary because I think that was a news announcement, but I was already well broken even, so that it couldn't pull against me and it couldn't, give me any slippage. So I tried to account for slippage, and given where price was, it was more than likely, if price was going to pull back from this news, it was so close to the highs at this point that it's likely to spike out the high, take the buy side liquidity, then come down. So that's what gave me confidence to hold it through the news. And yeah, as you can see, it played out well for me, came back to the highs and went into the next, went late into the overnight and, made sure it really took that high. And I'm very happy with that trade. So yeah, all in all, it was a good trade, and I hope you've gained something from this and some knowledge and that you can use yourselves. And again, if you liked, then subscribe.